Based on the provided data for Bitcoin, a long-term investment strategy appears to be the most suitable approach. The historical price data demonstrates a consistent upward trend, with the price steadily increasing over time. The forecast price also projects continued growth, suggesting a positive outlook for Bitcoin in the coming weeks. Considering the current price of around $103,000, a long position could be initiated with an entry price of $102,000. A stop-loss order should be placed at $100,788.41, the support price, to minimize potential losses. The target price could be set at $106,108.15, the resistance price, aiming to capitalize on the anticipated upward momentum. This strategy allows for a calculated risk with a defined entry, exit, and risk management plan, aligning with the bullish sentiment indicated by both historical data and the forecast. Based on the provided price information for Bitcoin Cash, a cautious long-term investment strategy appears to be the most suitable approach. The historical price data reveals a fluctuating trend with both upward and downward movements. While the recent 2-week price change shows some downward pressure, the forecast suggests a slight rebound in the coming week. The support price of $421.40 provides a potential floor for the price, indicating a level where buying pressure may emerge. Considering these factors, a long position with a long-term perspective is recommended. The entry price could be set around $425, aligning with the support level and the forecasted rebound. The stop loss should be placed slightly below the support at $420 to minimize potential losses. The target price could be set at $460, aiming for a moderate gain based on the historical price range and the resistance level. This strategy allows for potential capital appreciation over the longer term while managing risk through a well-defined stop loss. Given the price trends and forecast for stacks, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend over the past 2 weeks, with the forecast indicating further declines. The forecast suggests stacks could drop from its current price to as low as $1.28. The support price sits at $1.386 and resistance at $1.453. This indicates a bearish outlook in the short term, making a short position the most suitable strategy to capitalize on the anticipated decline in prices. For an aggressive short-term investment strategy, an entry price of $1.42 would be ideal, aligning with the current price and the forecasted price. The stop loss should be set at $1.48 to protect against any unexpected price recovery. The target price should be set at $1.30, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $1.386. Given the price trends and forecast for Ethereum, a moderately aggressive investment strategy would focus on a short-term approach to capitalize on the potential for a price correction. The historical prices show a recent peak followed by a slight decline, with the current price hovering near the support level. The forecast suggests a further dip in the coming week, indicating a possible short-term bearish trend. Therefore, a short position is advisable to take advantage of this potential decline. An entry price around $3,250 would be suitable, aligning with the forecasted price. The stop loss should be set at $3,300 to protect against any unexpected upward movement. The target price could be set at $3,150, aiming to capture a portion of the predicted price drop. This strategy balances the potential for profit with the need for risk management, making it suitable for a moderately aggressive short-term investment approach. Given the price trends and forecast for Ripple, a medium-term investment strategy appears to be the most suitable. The historical prices demonstrate a clear upward trend, with recent fluctuations suggesting consolidation. The forecast indicates continued upward movement, with prices potentially reaching $3.39 in the coming weeks. The support price of $2.5722 provides a safety net, while the resistance level of $3.2904 suggests potential for further gains. Therefore, a long position in Ripple is recommended for a medium-term investment horizon. An entry price around $3.15, close to the current price and above the recent support, would be prudent. A stop-loss order should be placed at $2.92, below the recent dip and providing a buffer against potential price reversals. The target price should be set at $3.30, allowing for potential gains while remaining conservative. This strategy aims to capitalize on the predicted upward momentum of Ripple over the medium term while managing risk effectively. Given the price trends and forecast for Binance Coin, a medium-term investment strategy appears to be the most suitable approach. The historical prices show a general upward trend, but with recent fluctuations. The forecast suggests a slight upward movement over the next week, indicating a potential for continued growth. The support price of $688.86 provides a safety net, while the resistance at $702.03 suggests that the price might consolidate before breaking out further. Therefore, a long position in Binance Coin is recommended for a medium-term investment horizon. An entry price around $692, slightly above the current price and below the resistance level, would be prudent. A stop-loss order should be placed at $688.86, the support price, to limit potential losses. The target price could be set at $702.03, the resistance level, allowing for a potential profit of approximately 1.5%. This strategy allows you to capitalize on the potential upside momentum of Binance Coin while managing risk effectively. Given the provided price data and forecast for Stellar, a medium-term investment strategy appears to be the most suitable approach. The historical price data shows a slight upward trend, but the forecast suggests a period of consolidation followed by a potential increase. This indicates that while Stellar may not experience a dramatic surge in the short term, it has the potential for growth in the medium term. Therefore, a long position is recommended for this strategy. A suitable entry price would be around $0.435, aligning with the support level and the anticipated price consolidation. The stop loss should be set at $0.4268, the support price, to minimize potential losses. The target price can be set at $0.489, the recent high point, aiming to capitalize on the potential upward movement predicted by the forecast. This strategy allows for a balanced approach, taking advantage of the potential for growth while managing risk effectively. The historical price of Toncoin shows a fluctuating trend, with recent highs and lows suggesting a period of consolidation. The forecast indicates a slight downward movement in the coming week. Considering the price history, the current price near the support level, and the bearish forecast, a short-term short position seems like a reasonable strategy. An entry price around $5.25 aligns with the current price and the forecast's downward trajectory. A stop loss should be set slightly above the current price at $5.30 to limit potential losses if the price unexpectedly rises. The target price could be set around $4.90, allowing for a reasonable profit margin while staying below the support level. This strategy capitalizes on the potential for a short-term price decline in Toncoin. Given the price trends and forecast for Cardano, a moderate-term investment strategy focusing on a long position seems promising. The historical prices show a generally upward trend, with recent fluctuations around the support level of $0.9783. While the forecast indicates a slight dip in the short term, it suggests a potential rebound towards the end of the period. This suggests a sideways to slightly bullish outlook in the moderate term. Therefore, an entry price of 98 cents would allow you to buy in near the support level, while a stop loss at $0.975 would protect against a deeper dip. The target price could be set at $1.05, aligning with the resistance level and allowing for potential profit as the price recovers. This strategy balances risk and reward, aiming to capitalize on the expected moderate-term upward momentum of Cardano. Given the price trends and forecast for Litecoin, a medium-term investment strategy focusing on a long position appears to be the most suitable. The historical prices demonstrate a general upward trend, with recent fluctuations suggesting consolidation. The forecast indicates a slight upward movement over the next week, suggesting continued positive momentum. While the support price of $98.40 provides a safety net, the resistance at $118.12 presents a potential ceiling for the immediate future. Therefore, an investment strategy based on a long position in Litecoin would involve entering the market at a price near the current support level, around $102. A stop-loss order should be placed below the support price, at approximately $98.40, to minimize potential losses. The target price should be set at $118.12, aiming to capture the potential upside movement towards the resistance level. This strategy allows for a medium-term investment horizon, capitalizing on the anticipated price appreciation while mitigating risks through a well-defined stop-loss. Based on the provided price information for SWAY-Coin, a cautious short-term investment strategy appears most suitable. The 2-week price change demonstrates a downward trend, and the 1-week forecast projects further declines. The support price sits at $4.4055, while the resistance is at $4.5908. This suggests a bearish outlook in the short term, making a short position potentially profitable. For this strategy, an entry price of $4.55 could be considered, allowing you to enter the market slightly above the current price while still benefiting from the downward trend. The stop-loss should be set at $4.65, above the entry price, to limit potential losses if the price unexpectedly rises. The target price could be set at $4.35, aiming to capture a portion of the anticipated decline before the price potentially finds support at $4.4055. This strategy emphasizes risk management and capital preservation, aiming for modest gains in a potentially volatile market. Given the price trends and forecast for Aptos, a short-term investment strategy focused on a short position appears to be the most suitable approach. The historical prices show a downward trend over the past 2 weeks, with the forecast indicating further declines. The support price is at $8.38, while the resistance is at $9.77. This suggests that the price is likely to remain below the resistance level in the short term. Therefore, an aggressive short-term investment strategy would involve entering a short position at the current price, around $8.53, with a stop-loss set at $8.77 to limit potential losses. The target price should be set at $8.21, aligning with the lowest forecast price, allowing for a profit before the market potentially rebounds. This strategy capitalizes on the anticipated decline in Aptos's price while managing risk through a defined stop-loss. Given the provided price history and forecast for SAY, a short-term bearish strategy appears to be the most suitable approach. The 2-week price change shows a downward trend, and the forecast predicts further declines in the coming week. The current price is hovering near the resistance level of $0.364, suggesting potential for a pullback. Therefore, an aggressive short-term investment strategy would involve entering a short position at the current market price, around $0.355. A stop-loss order should be placed at $0.364 to limit potential losses if the price unexpectedly rises. The target price could be set at $0.3415, the support level, aiming to capture a significant portion of the anticipated decline. This strategy capitalizes on the bearish sentiment indicated by both the historical price data and the forecast, while employing risk management techniques to protect against potential market reversals. Based on the Ethereum Classic price information provided, a short-term investment strategy appears most suitable. The historical price data reveals a recent upward trend, with the price hovering around the support level of $25.14. The forecast suggests a slight upward movement in the coming week, with the price likely to remain within a relatively stable range. This indicates a potential opportunity to capitalize on the short-term price fluctuations. Therefore, a long position is recommended, aiming to benefit from the predicted price increase. An aggressive entry price could be $25, taking advantage of the current price proximity to the support level. A stop loss at $24.90 would protect against unexpected downward movements. The target price could be set at $26.50, aiming to capture a significant portion of the predicted price increase. This strategy prioritizes short-term gains by leveraging the anticipated price momentum within a defined timeframe. Polygon's recent price history shows a fluctuating pattern with an overall upward trend. The forecast suggests a downward movement in the coming week. However, the support price is relatively close to the current price, indicating a potential for a bounce back. Considering these factors, a medium-term investment strategy with a long position appears to be suitable. An entry price of 45 cents could be considered, as it aligns with the recent price action and is slightly above the support price. A stop loss at $0.439 would protect against significant downside risk. The target price could be set at $0.488, which is the recent resistance level and represents a potential upside of approximately 9%. This strategy aims to capitalize on the potential for a price rebound while managing risk effectively. Given the price trends and forecast for AEVO, a conservative investment strategy would focus on a short-term approach. The historical prices show a downward trend, with the forecast indicating further declines. The forecast suggests AEVO could drop from its current price to as low as $0.247, while the support price sits at $0.2826 and resistance at $0.3069. This indicates a bearish outlook in the short term. A short position is advisable to capitalize on the anticipated decline in prices. For a conservative short-term investment strategy, an entry price of $0.295 would be ideal, aligning with the current price and providing some buffer before entering a short position. The stop loss should be set at $0.3069, aligning with the resistance level, to protect against any unexpected price recovery. The target price should be set at $0.265, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $0.2826. This strategy aims to capture a portion of the potential downside movement while managing risk effectively. Given the price trends and forecast for optimism, a conservative investment strategy would focus on a short-term approach to take advantage of the potential for a minor price increase. The historical prices show a downward trend, but the recent price movement suggests a slight upward momentum. The forecast indicates a potential dip in price, but not a significant one. The support price at $1.69 acts as a floor, preventing a sharp decline. The resistance level at $2.569, however, is quite distant, suggesting limited upside potential in the short term. Therefore, a long position with a conservative approach is recommended. An entry price around $1.73, slightly above the recent lows, allows for potential profit if the price moves towards the support level. The stop loss should be placed at $1.69 to minimize potential losses if the price drops. The target price can be set at $1.82, aligning with the higher end of the recent price range and providing a reasonable profit margin. This strategy allows for capitalizing on a potential short-term upswing while mitigating risk with a well-defined stop loss. Based on the provided data for STRK, a bearish investment strategy is recommended for the short term. The 2-week price change shows a downward trend, and the forecast predicts further declines. The historical prices suggest a consistent downward momentum, with the price currently hovering near the support level of $0.3712. The resistance at $0.3917 indicates a potential ceiling for the price, making it unlikely to rebound significantly in the near future. Therefore, a short position is advisable to capitalize on the anticipated decline. An entry price of $0.385, slightly above the current price, allows for a buffer while still positioning for a downward move. The stop loss should be set at $0.3917, just above the resistance level, to minimize potential losses if the price unexpectedly rises. The target price can be set at $0.362, aligning with the lowest forecast price, allowing for a reasonable profit margin before the price potentially reaches the support level. Given the price trends and forecast for Solana, a medium-term investment strategy focusing on a long position appears to be promising. The historical prices show a generally upward trend, with recent fluctuations suggesting consolidation. The forecast indicates a continued upward movement, with prices expected to reach around $243 in the coming weeks. This aligns with the support price of $252.76, suggesting a strong base for further growth. Therefore, a suitable investment strategy would be to enter a long position at around $242, slightly below the current price. This allows for a potential entry point with a margin of safety. The stop loss should be set at $239 to limit potential downside risk. The target price could be set at $261, aligning with the resistance level and offering a good potential return. This strategy capitalizes on the bullish outlook for Solana while managing risk through a well-defined stop loss and a realistic target price. Given the historical price data and the one-week forecast for Jupiter, a cautious approach with a medium-term investment perspective seems most suitable. While the historical prices show some volatility, the recent trend suggests a potential upward movement. The forecast, however, indicates a decline in prices over the next week. This suggests that the current price might be near a short-term peak, creating a potential opportunity to enter a position with a medium-term horizon. Therefore, a short-term bearish position could be considered with an entry price around $0.838. The stop loss should be set at $0.877, slightly above the recent resistance level, to protect against unexpected upward movements. The target price could be set at $0.772, aligning with the support price and anticipating a potential retracement. This strategy allows for capitalizing on a potential short-term price decline while also mitigating risk by setting a stop loss above the recent resistance. Based on the provided price information for render, a cautious investment strategy is recommended. The historical price data shows some volatility, with a recent dip followed by a slight recovery. The forecast price suggests a continued downward trend over the next week. While the support price provides a potential floor for the asset, the resistance level remains relatively high, indicating potential challenges for upward price movement. Given these factors, a short position on render appears to be a more suitable strategy. An entry price near the current market price, around $7.04, would allow for capturing potential downside movement. A stop loss could be set slightly above the recent high of $7.70, limiting potential losses. The target price should be set at a level below the support price, around $6.60, to maximize potential profits while acknowledging the inherent risks associated with short selling. This strategy adopts a short-term perspective, aiming to capitalize on the anticipated price decline within the next week. Based on the provided price information for Solana name service, a cautious investment strategy is recommended. The 2-week price history shows a slight upward trend, but the forecast predicts a decline over the next week. This suggests a potential short-term correction in the price of Solana name service. The support price at $0.2002 and the resistance price at $0.2365 provide a range within which the price is likely to fluctuate. Considering these factors, a short-term short position is advisable. The entry price could be set at $0.224, slightly above the recent price action and near the resistance level. This allows for a potential profit if the price declines towards the support level. The stop loss should be placed at $0.231, slightly above the entry price, to limit potential losses. The target price could be set at $0.204, aligning with the forecasted lowest price, allowing for a reasonable profit margin. This strategy capitalizes on the potential for a short-term price correction while minimizing risk. Based on the provided historical price data and the 1-week forecast for Doge-Coin, an investment strategy centered on a long position appears promising. The historical prices demonstrate an upward trend, with the current price hovering near the support level of $0.35204. The forecast suggests a slight upward movement over the next week, with the prices predicted to remain above the current level. This indicates a bullish sentiment in the short term, making a long position a potentially lucrative opportunity. To execute this strategy, we can set an entry price at $0.355, aligning with the current price and providing a small margin for volatility. The stop loss should be placed at $0.352, below the support level, to minimize potential losses. The target price can be set at $0.373, representing a conservative profit target based on the forecast and the recent price action. This strategy allows for capitalizing on the anticipated upward momentum while mitigating risk through a well-defined stop loss. The provided price information for PEPE indicates a recent decline in price, with the forecast suggesting further downward movement in the coming week. The historical price data shows volatility, but the current trend leans bearish. Considering the forecast and the price history, a short-term short position seems to be the most suitable strategy. This approach capitalizes on the anticipated price decline. An entry price of $0.0000160 would allow you to enter the short position near the current price, with a stop loss set at $0.0000170 to minimize potential losses if the price unexpectedly rises. The target price could be set at $0.0000150, aligning with the lowest forecast price and allowing for profit-taking before the market potentially finds support. This strategy focuses on a short-term investment horizon, aiming to capitalize on the predicted price movement within the next week. Given the price trends and forecast for SHIB, a cautious investment strategy would focus on a short-term approach. The historical prices show a volatile period with recent declines, and the forecast indicates further potential decreases. The support price sits at $0.0000201, indicating a potential floor for the price, while the resistance is at $0.0000212, suggesting an uphill battle for upward momentum. This suggests a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $0.0000210, aligning with the recent price action and the forecast, would be appropriate. The stop loss should be set at $0.0000216 to protect against any unexpected price surges. The target price should be set at $0.0000199, slightly above the forecasted lowest price, allowing you to take profits before the market potentially finds support at $0.0000201. Given the historical price data and the downward forecast for Dog with Hat, a short-term bearish strategy seems most appropriate. The historical price shows a fluctuating trend with a recent decline. The forecast further suggests a continuation of this downtrend, with prices potentially dropping below the current level. Considering the forecast and the support price, a short position appears to be a suitable choice for a short-term investment strategy. An aggressive entry point for a short position could be around $1.50, aligning with the predicted price decline. A stop-loss order should be placed at $1.58 to limit potential losses if the price unexpectedly reverses. The target price for this trade could be set at $1.35, aiming to capture a significant portion of the predicted price drop. This strategy capitalizes on the anticipated bearish momentum of Dog with Hat while managing risk through a well-defined stop loss. Based on the provided price history and forecast for Doge-Coin, a short-term bearish strategy appears most suitable. The historical prices show a downward trend, and the forecast predicts further declines over the next week. This suggests that Doge-Coin's price is likely to continue its downward movement, presenting an opportunity for short selling. Therefore, an aggressive short-term investment strategy would involve entering a short position at the current price, with a stop loss set slightly above the recent high of $0.00658 to minimize potential losses. The target price should be set at $0.00500, aligning with the forecast's lowest predicted price, allowing for potential profit capture before the price potentially finds support. This strategy capitalizes on the anticipated short-term decline in Doge-Coin's price, aiming for a quick return within the next week. The price history of NEAR protocol shows a volatile trend with fluctuations between $4.75 and $5.79. The forecast indicates a slight downward movement in the coming week, reaching a low of $4.78. Considering this short-term bearish outlook and the price currently hovering near the support level of $4.906, a short-term short position strategy appears promising. To execute this strategy, an entry price of $5.10 could be considered, aligning with the current price and providing a buffer above the immediate support. A stop-loss order should be placed at $5.29, slightly above the entry price, to limit potential losses. The target price could be set at $4.90, aiming to capture a portion of the anticipated downward movement. This strategy capitalizes on the potential for a short-term price correction while minimizing risk through a well-defined stop-loss. Based on the provided Internet Computer Price information, a cautious investment strategy with a medium-term perspective is recommended. The historical prices indicate a period of consolidation with some downward pressure, while the forecast suggests further decline in the coming week. The support price at $8.171 acts as a potential floor for the price, while the resistance at $9.79 presents an obstacle to upward movement. Therefore, a short position with a cautious approach is suggested. An entry price around $9.30, aligning with the first forecast price, would allow for potential profit if the downward trend persists. The stop loss should be set slightly above the entry price at $9.54, mitigating risk in case of an unexpected price surge. The target price could be set around $8.46, the lowest forecasted price, allowing for a reasonable profit margin while acknowledging the potential for further decline. This strategy aims to capitalize on the anticipated downward movement while managing risk through a well-defined stop loss and a conservative target price. Given the price trends and forecast for Injective, a short-term investment strategy focusing on a short position appears to be the most suitable approach. The historical prices show a downward trend over the past 2 weeks, and the forecast indicates a further decline in price. The support price is at $20.42, while the resistance is at $23.12. This suggests that the price is likely to remain below the resistance level in the short term. Therefore, entering a short position at the current price of $21 would allow you to capitalize on the potential price decline towards the support level. To manage risk, the stop loss should be set at $22, slightly above the current price, to limit potential losses if the price unexpectedly moves higher. The target price should be set at $20, aiming to capture a decent profit before the price potentially finds support at $20.42. This strategy allows you to take advantage of the anticipated price decline while mitigating potential risks. Based on the provided information about BTC, a cautious short-term investment strategy appears to be the most prudent approach. The historical price data exhibits a volatile trend, with recent fluctuations indicating uncertainty. The forecast prices suggest a potential decline in the coming weeks, further supporting a bearish outlook. Considering these factors, a short position on BTC is recommended. An entry price around $420, aligning with the recent price dip and near the support price, would be suitable. A stop loss could be placed at $435 to limit potential losses if the price unexpectedly rebounds. The target price should be set at $390, taking into account the forecast and aiming to capture potential downside movement. This strategy prioritizes risk management while seeking to capitalize on the anticipated price decline. The recent price history of THETA network reveals a volatile pattern, with periods of both upward and downward movement. While the 2-week price change shows some fluctuation, the 1-week forecast suggests a potential decline in price. Considering this bearish short-term outlook, a short position seems more suitable for capitalizing on the anticipated price decrease. An aggressive short-term investment strategy for THETA network could involve entering a short position at $2.12, aligning with the current price. The stop loss should be set at $2.18 to mitigate risk if the price unexpectedly rises. The target price should be set at $1.96, slightly above the support price, allowing you to take profits before the market hits major support. This strategy aims to capitalize on the potential for a short-term price decline while managing risk through a well-defined stop loss. The 2-week price change for WorldCoin shows a volatile trend with both upward and downward movements. The forecast suggests a slight downward trend over the next week. Considering the volatile nature and the downward forecast, a short-term short position strategy appears to be suitable. An entry price of $2.18 aligns with the current price and the forecasted decline. The stop loss should be set at $2.22, above the current price and the support price, to protect against unexpected upward movements. The target price should be $2.05, slightly above the lowest forecasted price, allowing for potential profit taking before the price potentially bounces back. This strategy aims to capitalize on the anticipated short-term price decline while managing risk through a well-defined stop loss. Given the provided price history and forecast for hooked protocol, a cautious approach is recommended. The 2-week price change demonstrates a downward trend, and the forecast predicts further declines in the coming week. This suggests a bearish outlook for hooked protocol in the short term. Therefore, a short position is advisable to capitalize on the anticipated price decrease. A conservative entry price could be set at 33 cents, slightly above the lowest predicted price. A stop loss should be placed at 35 cents to limit potential losses if the price unexpectedly rises. The target price could be set at 28 cents, aligning with the projected lowest forecast price, allowing for profit taking before reaching potential support levels. Based on the provided price history and forecast for Artificial Superintelligence Alliance, a cautious short-term investment strategy is recommended. The 2-week price change reveals a period of consolidation and slight decline, with the forecast projecting further downward movement. The support price at $1.245 indicates a potential floor for the price, while the resistance level at $1.37 suggests limited upside potential in the near term. Considering these factors, a short position appears more favorable. An optimal entry point for a short position would be around $1.30, slightly above the current price and near the resistance level. This allows for a quick entry into the market as the price potentially pulls back. A stop loss should be placed at $1.34, safeguarding against unexpected price surges. The target price for this strategy is $1.22, aligning with the forecast and providing a reasonable profit margin before reaching the support level. This approach aims to capitalize on the anticipated price decline while mitigating potential losses. Based on the provided Polkadot data, a cautious investment strategy focusing on the short to medium term appears most suitable. While the historical price shows fluctuations, the forecast suggests a downward trend, with prices potentially dipping below the current level. The support price of $6.165 acts as a crucial floor, indicating potential buying opportunities if prices dip to that level. Therefore, a long position could be considered with an entry price around $6.165, aligning with the support level. A stop loss order should be placed slightly below the entry price, around $6.05, to minimize potential losses. The target price could be set at $6.656, the resistance level, aiming to capitalize on a potential price rebound. This strategy allows for a modest profit potential while mitigating risk by setting a defined stop loss. Based on the provided information for Filecoin, a short-term bearish investment strategy appears to be the most prudent approach. The historical price data reveals a fluctuating trend with a slight downward bias, while the forecast suggests a continued decline in the coming week. The price currently sits near the resistance level of $5.85, indicating a potential for a pullback. Therefore, I recommend entering a short position at the current market price, around $5.27. The stop loss should be placed at $5.44, above the recent high and a point where a reversal might occur. The target price should be set at $4.93, aligning with the support level and the forecasted lowest price. This strategy aims to capitalize on the anticipated price decline while managing risk through a well-defined stop-loss order. Based on the provided price information for Conflux, a cautious investment strategy with a medium-term perspective appears most suitable. The historical price data reveals a volatile trend with fluctuations around the 15 cents price level. While the recent price dipped below this level, the forecast suggests a slight upward movement in the coming week. This indicates a potential for a short-term rebound. Therefore, a long position is recommended. An entry price around $0.148, aligning with the support price, offers a good entry point. A stop loss at $0.144, slightly below the recent lows, protects against further downside. The target price should be set at 16 cents, aiming for a moderate profit by capitalizing on the forecasted upward movement. This strategy balances risk and potential reward, allowing for a medium-term investment horizon to capitalize on the potential for Conflux to recover towards its recent highs. Based on the provided Ethereum name service price data, a cautious investment strategy with a medium-term perspective appears most suitable. The historical price shows a slight upward trend, but the recent price movements have been relatively volatile. The forecast suggests a continuation of this upward trend, albeit with some potential for consolidation. Therefore, an investment strategy involving a long position is recommended. A suitable entry price would be around $33.50, slightly above the current price and the support level. This allows for some room for price fluctuation while still capturing potential upside. The stop loss should be set at $33, ensuring protection against significant downward movements. The target price could be set at $35, aiming for a moderate return within a medium-term timeframe. This strategy balances risk and reward, capitalizing on the potential for upward price movement while mitigating potential losses. Based on the provided avalanche price history and forecast, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend in recent weeks, and the forecast predicts further declines. The current price is hovering near the support level of $35.19, indicating a potential for a bounce. However, the forecast suggests a continued downward trajectory, making a short position a more appealing option. An aggressive short-term investment strategy would involve entering a short position at the current price of $36. A stop-loss order could be placed at $36.50 to limit potential losses if the price unexpectedly rebounds. The target price should be set at $34.50, aligning with the forecast and offering a reasonable profit potential before the price potentially reaches the support level. This strategy capitalizes on the perceived weakness in the short term while acknowledging the potential for a rebound. Based on the provided VeChain price history and forecast, a short-term investment strategy appears most suitable. The historical prices demonstrate a recent upward trend, with VeChain currently trading near its support level of $0.04477. The forecast suggests a slight increase in price over the next week, reaching a peak around $0.0484. Therefore, a long position is recommended to capitalize on this anticipated price increase. An entry price of $0.0448, just above the current support level, would be prudent. A stop-loss order should be placed at $0.04477 to minimize potential losses if the price unexpectedly drops below support. The target price should be set at $0.048, allowing for a profit margin while staying below the predicted peak price. This strategy aims to capture the short-term upward momentum of VeChain within a week. Based on the provided information for PENDLE, a cautious investment strategy would focus on a short-term approach. The historical price data shows a volatile pattern with recent fluctuations, suggesting potential for short-term price swings. The forecast indicates a downward trend, with prices potentially dropping below the current levels. Considering this bearish outlook and the volatile nature of the asset, a short position seems more suitable for capitalizing on the anticipated decline. To implement this strategy, an entry price of $3.85 could be considered, aligning with the recent price action and allowing for a buffer before the predicted drop. The stop loss should be set at $3.96 to limit potential losses if the price unexpectedly moves upwards. The target price could be set at $3.59, aligning with the forecasted lowest price and providing a reasonable profit target. This strategy prioritizes risk management and aims to capitalize on short-term price movements within the volatile pendle market. The sandbox shows a fluctuating price pattern over the past 2 weeks, with both upward and downward movements. Although the 1-week forecast predicts a continued downward trend, the historical data suggests potential for short-term rebounds. Considering the forecast and price history, a short-term trading strategy with a focus on capturing these potential rebounds might be suitable. We recommend entering a long position at $0.558, the recent low, as it represents a potential entry point for a short-term rally. The stop loss should be set at $0.5463, the support price, to limit potential losses. The target price could be set at $0.6198, the resistance price, aiming to capture a significant portion of the potential upside. This strategy capitalizes on the potential for a short-term price increase while mitigating risk by utilizing the support level as a stop loss. Given the current price trend and forecast for Decentraland, a short-term investment strategy appears to be the most prudent approach. The historical price data reveals a fluctuating pattern with recent downward movements. The forecast further suggests a continued decline in price over the next week, reaching as low as $0.455. The support price sits at $0.4556, indicating potential for further downside. This bearish outlook in the short term makes a short position the most suitable strategy to capitalize on the anticipated decline in prices. An aggressive short-term investment strategy could involve entering a short position at $0.483, the current price. The stop loss should be set at $0.498, slightly above the recent high, to protect against any unexpected price surges. The target price could be set at $0.455, aligning with the forecasted lowest price, allowing you to take profits before the market potentially reaches major support. This strategy aims to capitalize on the short-term bearish momentum while managing risk through a well-defined stop loss. Based on the provided ENG coin price history and forecast, a short-term bearish strategy appears most suitable. The historical prices show a downward trend, with the recent price hovering near the support level of $0.1426. The forecast further reinforces this bearish outlook, predicting a continued decline over the next week. Considering these factors, entering a short position at the current market price around $0.169 would be a strategic move. To manage risk, a stop-loss order should be placed at $0.173, slightly above the current price, to protect against any unexpected price surges. The target price for this short position could be set at $0.142, aligning with the support level and potentially capturing a significant portion of the anticipated price decline. This strategy capitalizes on the short-term bearish momentum while incorporating risk management measures to mitigate potential losses. First, based on the provided historical price data and the 1-week forecast for Uniswap, the strategy suggests a short-term investment perspective. The price history shows a slight downward trend in the past 2 weeks, and the forecast predicts a continuation of this trend. This indicates a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated price decline. Second, considering the price information, an entry price of $13 would be appropriate, aligning with the current price and the forecast. The stop loss should be set at $13.45, slightly above the current price to protect against any unexpected price increase. The target price should be $12, a conservative target based on the forecast, allowing for potential profit before the price potentially reaches the support level. Based on the provided historical price data and the 1-week forecast for Chainlink, an investment strategy focusing on a short-term approach appears to be the most suitable. The historical prices demonstrate a general upward trend, with recent fluctuations around the $23 to $25 price range. The forecast indicates a continuation of this upward movement, with prices projected to remain within this range. Considering this, a long position is recommended. A conservative entry price at $23.50 aligns with the current price and the support level of $19.40, minimizing immediate risk. A stop loss at $22.80 protects against potential downward movements, while a target price of $25.50 allows for capturing potential gains if the price reaches the resistance level of $26.98. This strategy capitalizes on the short-term bullish momentum while managing risk effectively. Based on the provided information for Aave, a medium-term investment strategy appears most suitable. The historical price data reveals a consistent upward trend, with recent price fluctuations indicating potential consolidation before further growth. The forecast price suggests continued upward momentum, reaching a peak around $368 in the coming weeks. The support price of $305.61 provides a safety net for potential price corrections, while the resistance price of $352.32 signifies a level to watch for potential profit-taking opportunities. Therefore, an investment strategy involving a long position in Aave is recommended. A suitable entry price would be around $330, allowing for a buffer below the current price and aligning with the forecast's upward trajectory. A stop-loss order should be placed at $315 to mitigate potential losses in case of a sudden price reversal. The target price could be set at $360, aiming to capture a significant portion of the anticipated price appreciation before reaching the resistance level. This medium-term approach allows for capital appreciation while managing risk effectively. Based on the provided price history and forecast for EOS, a medium-term investment strategy appears most suitable. The historical price data reveals an upward trend, although with some fluctuations. The recent price increase suggests potential for continued growth. The forecast also indicates a slight upward trajectory in the coming weeks, further supporting a bullish outlook. Considering this, a long position is recommended for EOS. A reasonable entry price would be around $0.824, aligning with the current price and the forecast's initial upward movement. To manage risk, a stop-loss should be placed at $0.7988, just below the support price, to limit potential losses. The target price could be set at $0.9107, the resistance price, aiming to capitalize on the potential for EOS to reach its highest point within the foreseeable future. This strategy allows for a balanced approach, capitalizing on the bullish momentum while mitigating potential downsides. Based on the provided data for Tron, a short-term investment strategy appears most suitable. The historical price data shows a recent consolidation period, with the price fluctuating between $0.221 and $0.249. The forecast suggests a slight upward movement, with prices potentially reaching 25 cents. However, the resistance level at $0.2594 indicates a potential ceiling for this upward momentum. Therefore, a long position is recommended to capitalize on the predicted price increase towards 25 cents. An entry price of $0.242 aligns with the current market price and the forecast. A stop-loss order should be placed at $0.238 to limit potential losses if the price unexpectedly drops. The target price can be set at $0.253, aiming to capture profits near the support level and before encountering potential resistance. This strategy leverages the short-term price forecast while managing risk through a well-defined stop-loss order. Based on the provided price information for Suncoin, a short-term bearish strategy appears to be the most suitable. The historical price data shows a recent downward trend, with the price hovering around the support level. The forecast also indicates further price declines in the coming week. This suggests a potential for short-selling Suncoin to capitalize on the anticipated price drop. An ideal entry point for this strategy would be around $0.0225, slightly above the current price. The stop-loss should be set at $0.02328, the resistance price, to minimize potential losses if the price unexpectedly rises. The target price should be set at $0.02106, the support price, allowing for a profit if the price declines as forecasted. This short-term strategy aims to take advantage of the current bearish sentiment and potential price correction in Suncoin.